So it's now 10 a.m. So I'm gonna start my presentation. But first and foremost, thank you very much for joining my session, even if it's an early morning session. Thank you. And I understand that Japanese equity is a bit exotic or niche asset class, but I'm very proud of here and explain investment opportunities here in Japan. By the way of introduction, my name is Kei Ohashi, and I'm director of Sumitomo International. And I'm based in London, and I've been living for London 2 years. And before I joined Sumitomo's London team, I work at Tokyo headquarters in Sumitomo's asset management in Tokyo, and manage the Japanese, not only Japanese, but also Asian investors. And prior to joining the Sumitomo's, I work at the Japanese asset management firm and manage the financial fund of hedge funds or the global fixed income. But the reason why I switched my job to Sumitomo's as the sales representative for the global investor is that as a Japanese, I'm very proud of introducing investment opportunities for global investors, especially Switzerland investors. So today, I'm happy to explain the investment opportunities for you as a Japanese. So that's a brief introduction of myself. And I think Sumitomo's is kind of the emerging manager in Switzerland. So let me quickly introduce who is Sumitomo's. Sumitomo's Asset Management is one of the asset management arm of the Sumitomo Mitsui Trust Banking Group, one of the largest banking group in Japan. And our AUM is over 600 billion US dollar, but mainly Japanese institutional investors account for over 80%. So the current AUM for the global investor is quite limited, roughly 30 million, just 5%. I'd like to tell you that the unique point of our company is that we are specializing in the Japanese active strategies. We have over 50 investment specialists that are specializing only Japanese equities, over 30 portfolio managers, and over 20 research analysts. And our investors in the global, we are catering to sovereign wealth funds in the Middle East, central bank, and the pension funds. And Switzerland, we're offering our funds or strategy for mainly private banks, wealth managers, and the family offices. So I'd like to tell you that the scale of Japanese equity market, as I mentioned earlier, well, Japanese equity is quite niche and exotic, and I believe that some of you already invested in the Japanese equity like 30 years ago when Japan as number one. And after that, the exposure gradually decreased, but still, Japan is the second largest exposure within the MSCI, World Index and the Small Cap Index. However, I believe that for Switzerland investors, Japan is a bit far away, like 90,000 kilometers from Switzerland, and direct flight, even if direct flight from Zurich, it will take roughly 12 or 30 hours, so it's quite long distance. So I think that it's a bit difficult for Switzerland investors to cover or invest in Japan. So today, I'm gonna tell you that two key perspectives. One is the beta perspective, why Japan, and second one is that why active investment is attractive for the Switzerland investors. And lastly, I'm happy to tell you that introduce our flagship Japanese active strategies. So first one is why Japan? It's just ramen, but every time or go to that. But every time I'm really, the surprising thing for me is that we can have a very good ramen restaurant in Zurich named Yume Ramen Zurich near the central Zurich station and then near UBS office. But I really like that one. And in London, we cannot have that kind of great ramen restaurant. But for me, it's a bit pricey, roughly 25 Swiss franc. Yeah, it tastes good, but it's pricey. But surprisingly, if you go to Japan, only 6 Swiss franc, you can have the good, amazing ramen in Japan. So I want to tell here is that Japan is surprisingly cheap. So this is the result, and price in Japan have not risen in 30 years. And just compare the consumer price in G7 countries. Well, a lot of developed countries struggled, difficult inflation era like a couple of years ago. But Japan finally enjoying the mild inflation, and as this long distance, we struggled long deflationary era. So, and finally, we saw the end of the deflation era. So that's one of the reasons why the BOJ they terminated their negative interest rate policy, and Japan is kind of moving its pretty unique own rhythm. Obviously, other developed countries they are cutting interest rate, but only Japan is facing kind of the interest rate hike situation. And one of the reasons behind it is that finally we observed a very good trends in wage increases, same as the consumer price. Japanese companies' trends in wage increases almost hovering around 2% for roughly 3 years. But last year and this year, they are increasing increasing wages, and it exceeded 5%. They're reaching the highest level in 34 years. I would say that there are some reasons behind this, but to attract young, talented people, Japanese companies have to raise increases because in the past, most of the freshmen they didn't have an option to work abroad, like Singapore, Hong Kong, or other abroad. But currently, they are English speaker, and they have an option to work at the global companies. So to attract that kind of young talented people, Japanese company have to show attractive salary to create or to hire the attractive labor forces. But the most frequently asked question is that they have a staying power? But I would say that yes, they can continuously increasing their wages. And I think it's a very unique chart, but it shows that decline in working population in Japan. Aging society is a very severe social issue in Japanese economy. And as the gray bar chart shows, current working force, roughly 70 million people, will be decreased roughly 50 million by the end of 2014. So it is very difficult situation in Japan. However, thanks to exporters business or a couple of the inbound related business, we believe that the labor demand itself will gradually increase towards the 2014. But as the orange line shows, obviously labor supply dramatically decreased. So, but that could mean there's a huge gap between labor demand and labor supply. So, but that could mean the Japanese company have to increase their salary to hire enough labor forces. But the next question is that do they have enough cash, or does it mean like squeeze their profit? But that's our answer. Japanese company have a cash to increase wages. When we compare with 20 years ago, the operating income of Japanese companies and the cash almost double results. So it means they have still enough room to raise their salary in the future. And when prices and wages increase, I would say that stock price also trend to rise. That's the historical movement since 1989. Like if you see from 2005 to 2007, we saw that the CPI and the total cash increase was increased, and we saw that Nikkei 225, the representative indices, also increased. We saw that same period in from 2012 and 2014, And recently, we saw that this movement. So we firmly believe that this movement will continue in the future. And the other one I'd like to mention is that Japanese companies solid corporate fundamentals. We believe that, based on our in-house research analysis, we believe that the Japanese companies will post strong earning results. I mean, the double digits for this fiscal year, just ended by the end of March. And it will reach 11.6%. And both foreign demand, I mean, the exporters and both corporate, I mean, the domestic type of companies, they will post in double digit. However, next year, I mean, this fiscal year, it's a bit difficult for exporters, obviously, like a reciprocal tariff for Trump. That is a heavily damaged. And this morning, I was quite shocked to see the Nikkei 225 stock prices, but it's difficult. However, we believe that domestic type of business company, they will post a strong earning announcement for this fiscal year. And just P comparison shows that the right bar chart, we think that still Japanese P is reasonable compared with world indices or US indices. And the recent years, actually, the Japanese equity was booming. And if I tell you that the one reason behind is that I would say that corporate governance revolution, that was the main driver of the good performance of the Japanese equity market recent years. Well, in 2013, Tokyo Stock Exchange, they announced that all listed companies have to improve their capital efficiency going forward. Because, as the pink line chart shows, percentage of price to book ratio below 1 times for large cap was very, very high compared with Europe or the US. It was reached almost 60%, or the last 2 years, we saw that over 40% of the companies with the PBR below 1 times. So that's the reason why Tokyo Stock Exchange, they had concern over this results. And then after that, most of the all listed companies, they show how to improve their capital efficiency, such as increasing the share buyback or increasing dividend and so on. And then after that, it a little bit improved. So currently, recent result is roughly 35% of the companies PBR below 1 times. It's a bit improved, but still quite higher than Europe or US. And it shows that the result of the TSE announcement, as you can see, the total dividend payouts, all listed companies in Japan, gradually increased, especially dividend and share buyback. But the unique point here is that on the TSE's announcement, that was not mandatory. That was just request. So, if possible, please show how to improve capital efficiency going forward, blah, blah, blah. But the unique point of that Japanese company's culture is that even if that was not mandatory, but they just follow what the TSE said. And then roughly 90% of all this, 90% of large caps, they already show how to improve their capital efficiency. Take an example is that one of the regional bank, they mentioned that until their PBR reach 1 times, they will increase the dividend and the share buybacks. That's a very concrete plan, and market participants prefer to invest in that, purchase that stock, and that stock price surged, and successfully that was reached 1 times. That's one of the examples. That's the PBR is one of the driver, and going forward, I would say that ROE is our next catalyst, I would say. If we compare with the ROE between the Japan, US, and Europe, Japan is lowest. It's roughly below 10% so far. Yeah. So that's another issue for Tokyo Stock Exchange. And since Sumtrust Asset Management, we are one of the largest asset manager, and we luckily have a continuous discussion with the person of the Tokyo Stock Exchange. And regularly, we mentioned that the ROE should be the next catalyst for the Japanese equity market. I would say that most of the company have to seriously improve their ROE going forward. And one of the example is that Toyota has set 20% of the ROE as a guideline. And well, so we firmly believe that there's a possibility that the entire Japanese market will move towards focus on the ROE for the next stage. And well, I would say that another driver for the improving capital efficiency going forward is that activists, the activist fund, will push for the corporate governance reform. In the past, like when activist fund took exposure to the Japanese company or hesitate to listen like activist fund's opinion or feedback and so on. So they, even if the activist fund, they wanted to set a meeting, they declined. However, that kind of situation is gradually a change, and this is just a result increase in the shareholder proposal. But as you can see, the recent years, the number of the shareholder proposal increased, and I will say that of these, proposal from activists account for about 60%, which includes very positive feedback or the positive proposal. And currently, most of the Japanese company, they are quite open to hear and discuss with the activist fund to improve their capital efficiency. And currently, if some US or Europe active funds took new exposure to the Japanese fund, and a lot of the Japanese participants, they prefer to invest in that kind of companies because obviously it will be improve their share price or their business and so on. So that's a very unique situation in the recent year. And finally, I have two more slides. Another most frequently asked question is that Japanese yen currency. Last year, Japanese yen reached its weakest level against the US dollar in 34 years. So yen weakness, one of the hot topic last year and this year as well. But I would say that due to the interest rate gap between the US or other developed countries, and also like a safe haven asset class, like today's morning like activity, we believe that this level is a bit excessive. So we believe that Japanese yen should be more strengthening from this level. And based on our in-house analysis, our expectation is that Japanese yen against the US dollar will be 140 by the end of this year. So yen will be much stronger than current level. But given that, yeah, it's not good for exporters, obviously. I would say that roughly 60, 70, or to 70% of Japanese companies are exporters, and which got a benefit from the weak yen in recent years. However, since Japanese company, they have a very conservative outlook towards the Japanese yen, they set kind of the 140 or the 142 or 143 as currency level. So we believe that even if we will see yen strengthening like a 140 or 142 or 3, that's not so make a huge impact on the exporters. And those yen strengthening already, some part is already priced, so I would say that that's not make a huge impact. And lastly, from the beta perspective, it shows that inflow from overseas investors is a key factor in maintaining strength. Well, in the past, like 2004, when Koizumi reform announced, and also in 2013, Abenomics, they announced that his three arrow, the Japanese equity market enjoyed a very good performance on that period. So the next driver, obviously, will be the JPX, or the Tokyo Stock Exchange. It's not a kind of the Japanese government announcement, but kind of another government or another key driver for the Japanese equity market. As I mentioned earlier, Tokyo Stock Exchange, they are seriously wanting to improve capital efficiency in the Japanese market. And this kind of government-related activity, which was promising for the global investors. And usually or recently, we have a conversation with the Middle Eastern investors. Especially, they are very keen to increase their exposure in the near future. It is a public information, but Qatar Investment Authority, one of the largest sovereign wealth fund in Qatar, they always positive increase the Japanese exposure. And last year, they mentioned through the Nikkei newspaper, and this year as well, we think that they will increase their Japanese exposure, we believe. So that kind of global investors will be the key driver for the inflow of the Japanese equity market. So that's the story of Japanese equity market from a beta perspective. Obviously, the kind of the idiosyncratic story of the Japanese equity market. And from this part, I'd like to tell you why active investment is good or attractive for global investors. Well, we gathered not only Japanese, active funds and strategy data using eVestment, one of the representative database of the strategy and fund base. And then we compared those data between Japan, global, US, and Europe, and we analyzed the win ratio. And Japan shows the over 70% of the win ratio. But if you see the US, of course, the S&P is a very strong index, and it's a bit difficult to underperform for the active funds. And the below bar chart shows that average alpha against the reference benchmark versus each active funds. The average alpha of Japan roughly 1%. So that could mean we strongly believe that Japanese equity market is a fertile hunting ground for alpha for the global investors. And I would say they are, that's another key slide. And active funds are superior to index ETF in the Japanese equity market. The reason why I create this slide, sorry, it's a bit tiny, but I understand that most of the investors have already taken exposure of the Japanese equity through ETF or the passive. For some of them, invest in the active fund. So we compare with the ETF versus active fund, and across the US, UK, Switzerland, and Italy, and also compare with the US. Like this light green line shows that the ETF of the US ETF, and the dark line shows that the active fund. So there's a huge gap. Obviously, the ETF is the most good, investment for the US equity. And this one shows the blue one shows the active Japanese fund, and light chart shows that ETF. ETF means that just the representative ETF. Just the representative ETF, and the active fund means that top active fund in terms of the AUM. But if you see the Switzerland active fund also very good. Actually, there's a huge gap between the passive fund and the active fund. And I want to tell you the reason behind this. One is that low coverage of sell-side analysis and analyst. If you see the left pie chart, there's a number of listed companies, and in Japan, there are over 4,000 listed names in the public equity space. It's exceeded the US. The unique point here is that even if the market cap is quite small, most of the small or mid-cap companies, they prefer to go public. Like market cap is roughly, well, 20 million or 30 million US dollars. It's quite small, but they prefer to go to public because there are not so many large venture capital or private equity space. They can inject their capital to the kind of the small caps or mid caps. So that's the reason why there's so many small and mid caps in the Japanese equity space. I would say roughly 30,500 names are categorized as small to mid caps. That's a pretty unique market. And also, I'd like to show you that average analyst coverage per stock, it's quite lower than other developed countries like the US or UK or Switzerland. And the reason behind this is that the raw rate of disclosure of financial reports in English. Of course, the large, or I would say very high quality names like Toyota, Sony, or Honda, that kind of blue chip names, they provide whole information both in Japanese and English. However, well, due to the lack of the resources, most of company, they do not provide whole information in English. So over 70% of Japanese companies do not publish official company document in English. So it's a bit difficult for the global sales analysts or the investors to analyze each single names. And lastly, why active investment effective for the investment only winners is that, well, what is happening in Japan is that very difficult situation or unprecedented situation, like they have to tackle with the inflation or the interest rate hike, or also they have to increase their wages. So there will be the bipolarization, there will be the winner and losers, because some companies, they are survive thanks to the low interest rate policy. So, but that could mean there are several, like a zombie type of zombie company in the Japanese equity space. So active investment can select or just pick up the true winners. It means that provide a great excess return against the benchmark just through ETF or the passive investment. So that's the story of why alpha is attractive for the Japanese equity space. And remaining time, I'm happy to introduce our flagship strategy, Sakigake High Alpha. Oh yeah, first and foremost, it's the Chinese character, Sakigake. And I think it's, of course, you cannot read it, but it means like pioneer or the head of the curve, which successfully express investment concept of this strategy. So that's the reason why we pick up this name. Sometimes it's difficult for you to pronounce it, but yeah, as a Japanese company, we using this Sakigake over this Japanese font. Yeah. And the first and foremost, I'd like to tell you that performance of Sakigake strategy is successfully beating the benchmark. It's just the cumulative return against the benchmark. But if you see the annualized return, it shows roughly 13% since the inception, and the excess return since inception is 3.5% per annum. And if you see the bottom bar chart, it is the active one. So sometimes it posted negative return against the benchmark. However, most of the period, it successfully outperformed the benchmark, regardless of the market condition, like a value-driven market or the growth-driven market, and so on. So I would say that this is kind of the all-weather type of strategy, and which is most suitable for the global investors who cannot, select the like a value name, like a combination of the value and growth. So it is a core. So if you wanted to take exposure through only one Japanese equity fund, we highly recommend this type of core type of strategy for you. And this is the result. Oh, sorry. This is the result of the 3-year rolling return versus topic. This horizontal line shows the topic's 3-year rolling return, and vertical line shows the Sakigake's return. And this boundary line of the outperformance or the underperformance. So this blue dot shows it means that Sakigake strategy outperformed the benchmark, and the percentage of the outperforming is roughly 95%. So if you invest in Sakigake over 3 years, you can enjoy the outperformance. And this is a quick overview of this strategy. Since inception of this strategy is 2013, so it has over 10-year tracking records. And we are offering the UCITS vehicle for global investors, and it has over 5 years tracking records. I mean, it was launched in 2018, so it has enough track records for the UCITS vehicle as well. And the turnover is dollar-based, it's roughly 20 to 60%, but I would say that if you see the name base, it's much lower. It's roughly 10 to 20%. And the AUM for the strategy base, it's roughly 1.5 billion US dollar. And the investment philosophy of this Sakigake strategy is that, well, as I mentioned earlier, the Sakigake means the pioneer of, or ahead of the curve. And there are so many social issues or structural changes in not only Japan, but also global, like demographic issue or the, decarbonization and aging society and so on. So we invest in companies who can solve that kind of the social issues or the structural changes through innovative service or products. And we prefer to invest in not on just single stock, but we prefer to invest in the group of companies. The reason behind this is that, to take an example for the auto industry in Japan, like Toyota. Of course, Toyota itself produced a very high quality car, but not only Toyota, but other auto-related names like a tire company or the motor or engine company and so on. They are providing their high-quality parts or service and share that one with Toyota. So I mean that auto industry itself achieved a long-term growth like one of the group. So we prefer to invest in the group of companies and who can share that kind of growth story with the long-term perspective. So to capture that kind of long-term growth story, Sakigake takes a very unique investment approach. It's the top-down thematic approach. At first, we set up the 8 investment theme, and based on such 8 investment theme, our 20 research analysts, they raise investment idea. And then finally, our portfolio manager construct portfolio based on the investment idea within the company. And that's the current investment theme of Sakigake High Alpha. Like IT or semiconductor, healthcare, Japan original. The theme itself, it's not so unique. That's kind of the standard theme. But I want to mention here is that like semiconductor, obviously it's the booming sector of that theme. But even before the booming, the generative AI, we set up semiconductor as an investment theme because in Japan, lack of the labor force is kind of the social issues. So to tackle with such social issues, utilizing AI, that's kind of the key factor for the Japanese economy. So that's the reason why we set up the semiconductor as one of the key investment theme within our investment theme. And the other one I like to mention is that Japan original with purchasing power. It's a bit unique investment theme. And purchasing power in emerging country means that a lot of non-Japanese visitors, they're visiting Japan. because Japan has a attractive sizing place and inbound-related business, like a domestic type of business, one of the key driver for Japanese economy. So we set up this one as a single investment theme to invest in the domestic type of business. So the beauty of this multi-thematic approach is that it's well balanced between cyclical name like IT or semiconductor and so on, but we successfully invest in kind of defensive sector as well, like purchasing power or the healthcare and evolving infrastructure is categorized as the defensive sector. But our portfolio is well balanced thanks to this multi-thematic approach, and we successfully providing the stable excess return for the long period. Since inception. And I'd like to tell you that just a couple investment opportunities. One is that inbound tourism. I believe some of them, some of people in this room have visited Japan before, but Japanese, a lot of sightseeing place like Kyoto or Osaka, Tokyo, they attract a lot of non-Japanese visitors, and currently non-Japanese visitors, they are posting a lot of amazing photos through social networks like Instagram, and it attracts next visitors. So that's create a virtuous cycle for the tourism-related names. So that's the result. But before the COVID-19 pandemic, roughly 31 million tourists arriving in Japan, but already it achieved a record high after the COVID-19 pandemic. But unique point is that before COVID-19 pandemic, we saw a lot of Chinese visitors. They are visiting Japan. But after the pre-COVID, we saw a lot of Western people there visiting Japan, which is very, they're different point if you compare with before COVID-19 pandemic. So the good point for the tourism-related name is that Chinese people, it's very close from Japan, so they haven't consumed a lot of time in Japan. The normal duration will be 2 or 3 days in Japan, but for the Western people, it's very long duration for the flight, so it takes much longer than Chinese people or the other Asian people. So average duration will be 2 weeks or 3 weeks. It means that they consume a lot of, and spending by tourists in Japan, it posted almost the double compared with before COVID-19 pandemic. So which is a very good tailwind for the inbound related names. So that's one of the investment opportunities. And due to lack of time, I'll skip that one. And this one shows that current exposure of this fund. Like inbound related names, like consumer discretionary is one of the overweight position. And the other one is that the information technology sector, IT related names is one of the high conviction names of this portfolio. So we overweight the position against the benchmark. However, that shows that the end of January, due to the current difficult situation, we are just loading our portfolio, and we gradually decrease semiconductor related names. And then the financial sector, since the BOJ, they will hike interest rate policy, and banking sector is quite promising for our fund. So we gradually increase especially banking sector to capture the interest rate hike situation. So although it's kind of the 100% of the bottom-up approach, but sometimes we have to concern over the kind of macro environment. So by doing so, we are successfully adjusting our portfolio to provide a stable excess return for investors. Yeah, and that's kind of the several top picks for our portfolio. And the top left, top of the table It's the Isetan Mitsukoshi Holdings. It's kind of the department or a retail store providing their business for the non-Japanese visitors and offering a lot of goods and staff and so on. Yeah. So that's end of my presentation, and thank you very much for joining this session. And if you have any question, I'm stay here, so please let me know. And lastly, I should mention that we have a booth in the first floor, and this is the daruma. It's the kind of traditional figures in Japan, and when you summon the wish, you have to write a first eye, and then if your dreams come true, and then you write another eyes. So today I'm write first eye, wishing everyone achieving a good return through the Japanese equity exposure. And if it suddenly come true, I'll write another one. So you can get another new one in the first floor. Thank you very much. Thank you. Thank you. Thank you very much. Thank you. Thank you for a kind message. Thank you. I think you've sent me that message, right? Oh, sorry.